My trading evolution did not begin with charts or strategies, but with a quiet misunderstanding about what trading actually was. Like most beginners, I arrived believing that success belonged to those who could predict markets, those who saw what others could not. Early books and videos fed this illusion, filling my mind with patterns, indicators, and promises of fast mastery. I confused exposure with experience and activity with progress. In those early days, every trade felt important, every market movement felt personal, and every loss felt like evidence that I was missing some crucial piece of information just out of reach. What I didn't yet understand was that trading is not a knowledge problem. It is a behavior problem disguised as an intellectual one. As a beginner, my focus was entirely external. I searched endlessly for the perfect setup, the perfect indicator combination, the perfect market. Losses were blamed on bad entries, bad timing, or bad luck. Wins were interpreted as confirmation that I was finally getting it, even when they were random. Personal finance and trading literature often describes this phase as necessary, but dangerous, because confidence grows faster than competence. I was learning the language of markets without yet understanding their grammar. Every chart looked full of opportunity, and the idea of sitting out felt like failure rather than discipline. The first real shift in my evolution came not from a breakthrough trade, but from accumulated frustration. Despite effort and study, my results were inconsistent. Emotional swings were intense. I began to notice that my biggest losses did not come from complex market conditions, but from moments when I felt bored, impatient, or eager to recover quickly. This observation was uncomfortable because it pointed inward rather than outward. Slowly, the literature I had skimmed before began to read differently. Books on trading psychology stopped sounding abstract and started sounding accusatory, as if they were describing my own behavior with unsettling accuracy. At this stage, I began to realize that my greatest obstacle was not strategy, but self-regulation. I was trading too often, risking too much, and thinking too little between decisions. Journaling, once dismissed as unnecessary, became unavoidable. When I recorded not just trades, but thoughts and emotions, patterns emerged that no indicator had ever revealed. I saw how fear pushed me out of good trades early, how overconfidence lured me into marginal setups, and how fatigue quietly sabotaged decision-making. This was the beginning of accountability, and it marked the end of my beginner phase, though profitability was still far away. The intermediate phase of my evolution was defined by subtraction. Instead of adding new tools, I removed them. Indicators disappeared. Time frames were reduced. Rules were simplified. What remained was price, context, and risk. Trading literature often emphasizes that clarity comes from constraint, and this proved true. With fewer variables, mistakes became harder to rationalize and easier to learn from. I also began to understand that waiting was not wasted time. High-quality setups were rare, and my job was not to find trades, but to be ready when conditions aligned. Risk management became the cornerstone of progress. For the first time, I treated losses as business expenses rather than personal failures. Position sizing rules were fixed. Maximum daily risk was defined. This structure changed my emotional relationship with the market. Losses still occurred, but they no longer threatened my identity or my account. Consistency began to replace volatility, not in profits, yet, but in behavior. This behavioral consistency was the true milestone, though I did not recognize it at the time. Another critical shift occurred when I stopped measuring success by daily outcomes and started measuring it by execution quality. Some days ended red, but felt successful because rules were followed. Other days ended green, but felt hollow because discipline had slipped. This reframing, common in professional trading literature, reduced emotional noise and sharpened focus. Trading became less dramatic and more procedural. I was no longer trying to win every trade, but to execute the same process repeatedly under varying conditions. The move toward profitability was gradual and anticlimactic. There was no single trade that changed everything. Instead, there was a slow narrowing of drawdowns, a smoother equity curve, and longer periods of emotional neutrality. I began to trust my edge, not because it always worked, but because it behaved predictably over time. Confidence shifted from hope to evidence. This was also when patience deepened. I could watch markets for hours without trading and feel no urgency. Sitting out became an active decision, a position aligned with my rules. As profitability stabilized, a deeper realization emerged. Trading success was not about becoming more aggressive, but more selective. I traded less, but with greater clarity. I knew when conditions favored my approach and when they did not. This self-knowledge, often understated in trading books, proved decisive. My strategy fit my temperament. I no longer fought the market or myself. Losses were absorbed calmly. Wins were managed without excitement, and focus remained intact across sessions. Looking back, the evolution from beginner to profitable trader was less about learning markets and more about unlearning behaviors. It required humility, patience, and an honest confrontation with my own patterns. Each stage stripped away another illusion, replacing it with a quieter, more durable understanding. Trading stopped being a test of intelligence and became a practice of self-awareness and discipline. And even now, the journey does not feel complete, because consistency is not a destination, but a relationship that must be maintained daily. A relationship built on respect for uncertainty, commitment to process, and the willingness to keep refining long after the beginner's excitement has faded and the real work has begun. And it continues every day, as long as I remain willing to observe, honestly. Wait patiently and act only when conditions align, rather than when emotion demands movement. And this willingness to wait is where the final transformation quietly takes shape. Because once waiting becomes natural, the market stops feeling like something you must conquer and starts feeling like something you cooperate with. This was the final and perhaps most difficult stage of my trading evolution, the moment when effort gave way to alignment. I no longer woke up asking what the market would give me that day, but whether the conditions were suitable for me to participate at all. This subtle shift changed everything. Trading sessions became quieter. Decisions felt cleaner. I was no longer hunting for opportunity. I was recognizing it when it appeared, and just as importantly, recognizing when it did not. In this phase, review became more important than execution. I spent more time studying my own behavior than studying charts. Losing days no longer triggered analysis paralysis, because I understood that losses were part of the distribution, not evidence of failure. What mattered was whether the loss came from a valid setup executed correctly. If it did, there was nothing to fix. This acceptance removed a tremendous amount of internal tension. Trading literature often speaks about emotional neutrality, but living it is different. Neutrality did not mean indifference. It meant stability. I cared deeply about my process, but no longer attached my worth to short-term outcomes. Profitable trading also revealed a new responsibility protecting consistency. When money started to flow more reliably, new psychological challenges emerged. Overconfidence became more dangerous than fear ever was. I learned that discipline must increase as results improve, not relax. Position sizing remained conservative. Rules remained fixed. The temptation to expand prematurely was resisted by remembering how fragile progress had once been. Many traders fail not on the way up, but at the moment they believe they have arrived. Staying profitable required the same humility that learning had demanded, Another realization during this stage was that boredom was a feature, not a flaw. Profitable trading was repetitive, even monotonous. The same setups, the same risk parameters, the same reviews. There was no thrill, and that was the point. Excitement had been replaced by trust. The absence of emotional spikes allowed focus to remain steady across weeks and months. This steadiness was what made the results durable. Trading had become a routine rather than an adventure. I also noticed how my relationship with time changed. I was no longer in a hurry to make money. The pressure to accelerate vanished. Growth became something that happened as a byproduct of discipline rather than as a target. This patience extended beyond trading and into life. Markets taught me that forcing outcomes creates fragility, while allowing process to unfold creates resilience. This lesson echoed quietly in the best trading books, turned out to be transferable far beyond charts and accounts. Looking back now, the path from beginner to profitable trader feels less like climbing a ladder and more like shedding layers. Each stage required letting go of something: the need to predict, the need to be right, the need to be active, the need for excitement. What remained was a simpler relationship with markets and with myself. I trade fewer hours, take fewer trades, and experience less emotional disturbance than ever before, yet my results are more stable. This paradox is the signature of maturity. The journey continues, of course. Markets evolve, and so must the trader. But the foundation is now solid. I know what my edge looks like when it performs and when it does not. I know my limits, my vulnerabilities, and my strengths. Most importantly, I know that profitability is not something you reach once and keep forever by default. It is something you earn repeatedly through attention restraint and respect for uncertainty. If this evolution mirrors parts of your own journey, consider subscribing to follow more reflections on the inner mechanics of consistent trading, and leave a comment sharing which stage you feel you are currently navigating and what lesson is beginning to reveal itself to you now.